Hey guys, welcome to another video. Today we're going to talk about protected swing lows and protected swing highs. And we're going to be using this week's price action to illustrate what a protected swing low and protected swing high is. Okay, so already on my channel, I've talked about swing lows and swing highs. So if you've not seen the video, please check my YouTube, my channel, and you will see the videos I made about swing lows and swing highs. Today we're going to talk about what makes these swing lows and highs a protected swing low and protected swing high. What that means is that when a swing low or a swing high is deemed protected, it means we don't expect price to trade in back into that swing low or to trade back into that swing high. Meaning that we can place these are safe places where we could place our stop losses while we are on a trade. Okay, so that's what a protected swing low or protected swing high is all about. All right. So this on your screen is the 1 hour time frame capturing all the price action for the week. Okay. So to the right of your screen, you could see that we had first off we had Friday digging into an old relevant low, swept the liquidity resting below that low and closed back inside of the range. Okay. Then we had Monday open up, create a shallow wick, and shallow wicks means more expansion. We'll talk about that when I talk about long weeks, short weeks, and just the importance of weeks generally. That is going to be the video I'm going to put up soon, so watch out for that. So as soon as Monday expanded and closed above the open of Friday's candle, that immediately qualified Friday's low to become a protected swing low. Okay, so you could trust that this low shouldn't be traded into all throughout the week as long as we keep expanding higher. Then we had Tuesday follow up on that Monday's expansion, and then we had Wednesday begin the reversal, right? To me, this Wednesday candle is more like a consolidation candle. Why? Because it didn't take out the previous day's high or low. So it's an inside bar. But what qualified this Wednesday's candle to be a reversal candle is that there was an SMT between Tuesday's high and Wednesday's high. If you check ES took out Tuesday's high, while NQ preserved Tuesday's high. Okay. So as soon as Wednesday closed bearish, that framed a candle two. Why that a candle two? That's a candle two because we have SMTs at these highs. And then we had Thursday frame a C3 expansion candle, while Friday bank holiday just consolidated. I didn't mention that Thursday also was NFP. That is why we had this good expansion on Thursday. Okay, so let us add some lipstick to this image. Here I have separated each day's price action using vertical lines, and I've also highlighted each day's protected swing low and swing highs. On Monday, you could see the 10 o'clock candle open expands lower, sweeps the liquidity resting below the low, and close back into the range of the 9 o'clock candle. It didn't just close back into the range, it also closed above the open of the 9 o'clock candle. Now, what that means is that we've created a CISD, a change in the state of delivery. And that change in the state of delivery is what confirmed the 10 o'clock low as a protected swing low. All right. As soon as this happens, we could look to trade the 11 o'clock expansion. Okay. You could trade the 10 o'clock expansion as well, the 10 o'clock reversal, actually. But it exposes you to more risk. And the low risk trade would be you trading the 11 o'clock continuation expansion. All right. And that is it for Monday's price action. Remember, this low is protected because we have a CISD and it closed above the 9 o'clock open. That's confirmed this low as a protected swing low, meaning that we don't want to see price trade below this 10 o'clock low all throughout the day as long as we maintain a bullish expansion. With Monday closing extremely bullish, okay, we already have a framework going to the next day that we are looking for further expansions. All right. Now on Tuesday, we had 8 o'clock sweep the 4 o'clock buy side liquidity, sell side liquidity is resting below the 4 o'clock low. Sorry, not buy side, the sell side. And as soon as that happened, this 8 o'clock candle is not an ideal candle you want to form. You want to be formed when you're looking for a reversal. However, what qualified this 8 o'clock candle as a reversal candle is when we had this SMT between the 8 o'clock candle and the 9 o'clock candle. What also added to the confluence is that we had ES 8 o'clock candle close back into the range. That closure above the low, that is the 4 o'clock low, is what qualified that 8 o'clock candle as a reversal candle. However, trading the 9 o'clock expansion would be very risky if that is all you have as confluence. But when you pair that information with an SMT, just formed right at the low of the 8 o'clock candle, that gives you much more confluence to expect a 9 o'clock expansion, which is also a C2 expansion. Okay, trading the C2 is not always the ideal candle to trade. C2 is not always the ideal candle to trade, but when you pair certain confluences, it makes it ideal to trade. Although it poses more risk to a new beginner or a new trader who is still finding his way around the market. So for me, I would recommend you stick to the candle three until you've gathered enough experience and data to trust trading the candle two expansion. And that is it for the Tuesday. So you could see that the 9 o'clock candle was confirmed. The 9 o'clock low is confirmed a protected swing low when price closed above the 8 o'clock candle. That change in the state of delivery is what made the nine o'clock low a protected swing low. Okay. And then now we have Wednesday. Wednesday is not an ideal day I would have wanted to trade because coming into Wednesday, I would have been expecting to trade candle four, meaning I'm looking for further expansions. All right. But as you could see, that we didn't have any candle two closure until 9 o'clock. And then at 9 o'clock, when price created that swing low, we did not have the confirmation that this low is now a protected swing low. What would have confirmed that 9 o'clock low to be a protected swing low is price trading above the 8 o'clock candle, which would have created a CISD. Now, another thing one thing I also noticed, which disqualified this day for me, was that we had a C2 closure as a 7 o'clock, right? And that was confirmed when the 8 o'clock closed below that bullish candle that created the swing high. Now, that for me is a CISD. And the only reason why I will be trusting price to trade back above these highs and take out these buy side liquidities is if we have a proper candle two closure. We had that at 9 o'clock, but as soon as we had that, we did not. There was no reasonable confirmation to keep our buyers alive going into the day. Then by 11 o'clock, we had price trade expanded again higher, but this expansion was only met with an SMT with ES, and then we see price close again below the 10 o'clock candle, framing another C2 bearish candle closure. And we see 11 o'clock, 12 o'clock expanding lower. I personally don't trade the PM session. So once the AM session is exhausted, I am done for the day. So if you have enough data to back your PM interaction, there would have been a trade for you by 12 o'clock after this 11 o'clock had created a C2 candle closure, right? This is the 11 o'clock I'm talking about here. Sorry, I've not been using my arrow. This is the 11 o'clock I'm talking about here. Okay. As soon as this created a C2, we'd have traded the 12 o'clock expansion and then keep trading lower. Or you see this 7 o'clock swing high with the 8 o'clock CISD. That for me disqualified this day to be a bullish day. And the only reason why this would have been confirmed, why I would have revalidated my bias is if we had an expansion at 10 o'clock, which we did not have to the upside. Okay. Another thing you could also point out to see is that already we were closing 50% below the previous day's candle. Okay. Previous day's price action. And that to me disqualified this day as a continuation. Okay. Now we have Thursday, NFP news on Thursday. After we had this SMT put in between Tuesday and Wednesday, we had price create a Wednesday C2 candle, framing a C3 expansion for Thursday. All right. And that's what we have. Now this high was confirmed a protected swing high after we had these 10 o'clock candles close below these consecutive bullish candles that framed this high. All right, where that's an SMT, we have this high confirmed as a protected swing high. Okay, and then we had Friday's bank holiday with price just consolidating all throughout the day. All right, nothing ideal to see here. Now let's drop down. So from this, okay, before we drop down to the lower time frames, from this, I will tell you that the days that would have been ideal for me to trade would have been Monday, Tuesday, Thursday. Monday, Tuesday, Thursday would have been the ideal days to trade. Okay. Although Thursday was a bit tricky because we had ES putting up higher highs as at 10 o'clock. Okay. As at 9 o'clock, price was expanding higher. And then 10 o'clock came and reversed and took out all the sell side liquidities. So Thursday was a bit tricky for everyone. So we had ES putting up higher highs and then we had NQ putting on lower lows. So, but you could when we draw down to the lower time frame, you could see that we still had opportunities to interact with the market. Okay, so this is Monday. On Monday is the 1 hour time frame, the 1 hour chart. Okay, the 1 hour chart we had. Remember we said we this 10 o'clock frame the C2 reversal candle, and what made this low protected low when price swept these liquidities and closed back into this range and closed above the open of this 9 o'clock candle. This became a C2 reversal candle. And what do we expect after reversal candle is formed? Expansion, consolidation, manipulation, expansion. All right. This is the 5 minutes time frame. So we have price put on this series of consecutive bearish candle, expanding lower to take out this buys, sell side liquidity. As soon as price took out these sell side liquidities, we saw price expand aggressively above this bearish candle. Now, this is the ideal framework you want to see to qualify a reversal as a high probability reversal. So we don't want to see price stalling to take out or to close above the last bearish candlestick that framed the low. And that is what happened here on Monday. As soon as we see this, as soon as you see this, you can begin to frame a bias for your reversal. So this could have been your first entry, right? As soon as price created this consecutive bearish candlesticks and price closed above it, we formed a new protected swing low. This is the first swing low, second swing low, right? And then we had price close bullish, aggressively bullish, which is the 10 o'clock candle. Now, if you had missed this or if you had ignored this because you don't want to trade the candle 2 reversal and simply wanted to stick to the candle 3 expansion, this would have been your entry. So we see price open up by 11 o'clock, consolidate a little bit, trade high, sweep this liquidity is resting below this low, right? And as you can see in the 15 minutes time frame, price was simply retracing into this 15-minute gap. As soon as price retraced into the 15 minutes gap, and we saw price close above these consecutive bearish candlesticks, that framed a framework for an entry. Take out to 2 hour or 3 hour, and you're off for the day. This is an ideal trading day, an ideal day you want to be on the market. Okay, expansion. Second example is on Tuesday. So we had Tuesday. We talked about this already. Okay, so this is how you'd have interacted on the lower time frame. You see price framing this reversal with price putting in consecutive bearish candlesticks. Okay, stabs into this low. Then we had 9 o'clock open. Price took out 8 o'clock low while preserving it on ES. Right, as soon as price did that, what confirmed this low to become a protected swing low is when price closed aggressively above these consecutive bearish candlesticks, framing a CISD, right? And confirming that this low is protected. So what do we do now? We take a trade. Our stop loss below this low. And what are we saying? We are saying that if we are correct, if the market is going to expand higher, we don't want to see price trade below this low. Okay? This is the ideal interaction. And we have 15 minutes give a more clearer view. You could see price create this SMT, sweep these sell liquidities, close back into the range, closure above the open price of this bearish candlestick, creating the CISD, 930 opened, trade low, form this shallow wick, and expanded higher. Okay, so that was Tuesday's price action. Beautiful price action on Tuesday. So we have on Wednesday, okay, Thursday, sorry. This is the 8 o'clock candle, NFP candle, right? So we had 9 o'clock expand and fail to take out this 8 o'clock buy side liquidities. And not just that it failed to do that, it also created an SMT with ES. As soon as this happened, okay, what will qualify this high to be a protected swing high will be price closing below these consecutive bullish candlesticks. Not one, not two, but these three. Okay. Or you can use this one actually, because we see this one stabbed into this low and framed a new range. So this is the range high, the range low. After price took out this swing low. And as soon as price took out this swing high, this range low, this range high here, framed an SMT with ES, right? Right at 50% of the previous day's candle range. Okay. So this was 50% of the that this blue line denoted here is the 50% of Wednesday. So when we are anticipating a classic expansion day, you don't want to see price expand above 50% of the previous candle range. And that's what happened here on Thursday. As soon as price got there, 50% was now used as a classic resistance. Framing an SMT there at that 50% is an ideal, it's just like adding more confluences to your already preconceived bias. All right. So we have price put up this high here, close above this consecutive bullish candlestick to frame the first CISD. I wouldn't trust this to be honest, but as soon as price did this, okay, and then we see price close below the low, aggressively below the low of this bullish candle. This is a CISD. This would have been your entry, stop loss above the high of this candle, and your 3R, and that would have been it for the day. So I hope this video has been able to explain to you what makes a swing low or a swing high, a predicted swing low or a high, while giving you examples from this week's price action. All right, and on to our next video. I wish you good luck and happy trading.